high 90% accuracy. So you're learning how I don't need to be in there everyday trading and how you don't need to be in there everyday trading. You're not trying to romance the outcome of everything that you do as a trader. You're embracing the uncertainty. That's different. You're embracing that hard right edge where you know that you have tools and perspectives and processes, protocols that you can follow that remove the need to be right. How many times have you watched that opening gap go back to its mid gap since I now taught it to you? Very few, very few times that it fails to do so, but more inclined to do what? What I said. And I can promise you, over the last 40 years, 4 decades, it's done that. Not just in the NASDAQ market, not just in ES, not just in Dow, but in currency futures, the bond market, the grain markets, the meats, the metals, all of that. Every market out there that you can measure this phenomenon, and it's there. Even if it doesn't have a separation of time like we view indices, like indices have in electronic trading hours, they stop. And they have a regular trading hours time where they stop and they restart at 6 p.m. And then we have regular trading hours starting at 9:30 a.m. It's important to have that information because that information gives you a perspective that the general public doesn't perceive. They don't see it. They may recognize there's a gap, but what do you do with that gap? See, by far and large, the average person that is aware of a gap, they think, okay, well, gaps at the opening generally like to be traded down into or up into. Okay, once it does that, then what? Well, I don't know about that, but you know, this is what we can see. This gaps like to get filled, and the chop is real. What do you do when the gap is a premium gap? It opens higher. We trade down and fill the gap, and then we keep going lower. What does that tell you? Well, I don't know. I do. My students do. You're learning that. But you need something that's going to encourage you in the beginning. And by having something that has a 70% likelihood of panning out, why do you think I want a 75 handle or more opening range gap? What is half a 75? It's an easy 25 to 30 handle run. And that's all you need. Once you get that, you can turn your charts off and go fishing, go to the movies, take your significant other out for a date, go have lunch, go back to bed, play some Xbox and PlayStation, whatever you want to do. Go to the gym because your day's done. Think about how fast the 70% repricing to mid gap went into large range gap. How many times have you seen that happen? How many times have you seen it physically happen? Just like that. And how many of you thought to yourself, if push comes to shove, if this is all I get good at doing, how is that a failure? How is that not a clear model that could take your fucking ass right out of that job that you're worrying about every day losing and why you're not getting the raise and how much more time you got to put up with fucking Carl? This fucking guy is constantly looking over your shoulder asking, so how's that trading going? How's that Forex trading going? You ready to quit your job yet? You gotta be a lifer like me. You know you are. Yeah, your corporate team. Your corporate team, baby. You are never getting out of here. I told you when you first told me this stuff, it's never gonna work for you. Looking at that opening range gap, understanding how it behaves, what you can do with it will separate you from putting up with Carl's bullshit. You won't have to go and work at that asshole anymore. But you have to submit to the time to getting good at reading it, not over leveraging, but one contract, one of them. traded 3 instances over a week. You get two trades, 1 trade. See what I did there? I brought you back to just 1 trade, 1 good trade a week. And it could be just inside that opening range gap. And you don't need to know where the draw on liquidity is right now. You have something that can feed you, put some grocery money in your pocket, pay your mortgage note, or half of it, or a portion of it. And that little tiny victory, that little tiny footing, that sure footing underneath your feet will give you the confidence and to remind you, you know what? I made the right decision doing this. Something pushed me into this pathway. It didn't happen by circumstance. It didn't happen because of, just, luck. You were placed in my path for a reason. We came together for some cosmic reason. Okay. And all you need to do is give yourself the opportunity to taste it one time, following the rules. And when you do that, you'll have every bit of the confidence to lean back on that one moment, that one instance where it happened in your hands. The bug will have bitten you. You will have been infected with it. You're ICT positive now. You're infected. And you'll go in looking for these types of things, these smart money signatures, and it'll encourage you because you've tasted it. You've seen it happen in your own hands. And it'll give you confidence to go in and keep doing more and more and more. And as you find more opportunities where you follow the rules and it pans out in your favor, it rewards you for following the rules. It does not punish you for being patient. It rewards you for being patient. It rewards you for being diligent and selective and in looking for this weak-handed arm wrestling match against ill-informed people that pretend that level 2 data gives them some kind of advantage, that pretends that volume profile has some measure of importance over price. It has no importance over price. It's only showing you what's already happened. It's not telling you where it's going to go. But understanding how looking at less informed traders and how they think about the market, how they internalize what price is likely to do. And when they get sentiment driven, a gap opening higher, the public's going to eat that up and think it's bullish. And when they start to run up a little bit higher, you're going to smile and you're going to say, I'm not buying that. That's the Judas swing. Because inside that opening range, that first 30 minutes, a Judas swing is going to form. And the gap is telling you right away where the initial draw is going to be. A gap higher, okay, you're looking for mid gap. Is there a range in there for 25 to 30 handles? You have a shoe in easy lead pipe cinch trade. All you got to do is wait for it to come down below a buy sign, balance, sell sign efficiency. If it's gap up higher, once it breaks below that, look for that gap to act as an inversion fair value gap. That's all I did Friday. That's all that was. That was not me painting a fair value gap to go long in. When the whole time in that morning I was saying I would not be buying this. I would not be buying this. I would not be buying. I told you, even if it ran up to primary buy side, I would not be in that long. Why? Because I taught you the opening range is going to be like a black hole, a vacuum that's going to pull price down into its midpoint. And how it trades to that midpoint in terms of the speed, how fast it gets there, and what does it do as soon as it hits it? Does it pierce right through it? Or does it repel back up? Or does it trade down through it and come back up and treat it as resistance, as a premium array, and then sell off even more and go for 3/4 gap closure? So we're not fooled by these assholes on social media anymore. They want to take things out of context because you have documented facts being shown to you in live stream. I'm not ambiguous. I'm telling you what I want to see, what I'd prefer to see, and where the actual PD rates are talking, where they're saying this is what's likely to do. And if you can't see that, you're lost. You're lost and you're untrainable. You're unteachable. I can't do anything for you.